Hi everyone, let's talk about Intec Pharma. It's a clinical stage biopharmaceutical company that focuses on developing drugs based on its proprietary according pill platform technology in Israel. Market cap 11 million. And actually, if we take a look at the biopharma catalyst on their drug pipeline, so there's two products, AP-THC phase 1 and also AP-CDLD on the phase 3. Latest news, pretty much not about the, if we take a look, for example, the latest share price and event. Yeah, actually there were some of the earnings updates, but no product updates since there's Intec announced 30 million private placement ahead of Decoy merger. Anyway, there's a lot of risks. The snowflake analyze shows red. There's a pretty high volatility going on this stock. The stock price is currently at the same level as it have been for a year, and earnings are forecasted to decline by an average of 17% per year for the next 3 years. Has less than 1 year of cash runaway. Volatile share price, as I said, shareholders have been diluted in the past year, so they print more shares out and does not have meaningful market cap based on simple Wall Street. 11 million. Market performance, 1 year return, 72% on the negative side. Of course, those numbers not beating the industry, neither the market, and price volatility considered higher than the industry and also the average market volatility. Valuation side, basically simple Wall Street, and also the tip ranks does not have any price targets, but I found on the Market Watch it is currently on average of $52, but I'm not sure is this that accurate because the peak that they had and also the biotechnology companies had in mid-February, highest point at that day were $36 per share. So maybe this could be the potential price target within the year. But anyway, this is highly volatile share price, so those who invested lately, for example, August, there are sitting minus 50%. 5 year return, we see the volatility more closely. So 3 years ago, or actually 2 years ago, mid-February, $700 drops to 30, 36. That is, minus 96% in a 5 years. So be careful, guys. Try to minimize that risk potential by investing not more. I mean more than one stock. Future growth for the company is forecasted annually to decrease by 17%, so they have this revenue in the past, so there's a, I'm not sure why it's not showing the actually it's here, March 31st. They managed to do earnings on the minus 14 million, but of course it's clinical stage, so they do a lot of research, and these two products that they have, earnings per share growth is forecasted as well as to grow, but it's forecasted that it could decline through this moment here, end of this year. Past performance, so as I said, the earnings are pretty volatile, and currently the company is unprofitable. Financial health side, we see here that it's debt-free company, which is pretty good, but the equity and the cash level is decreasing significantly through these years, and currently they do have cash 10 million and equity 11 million. It's not so bad situation as it could be with, for example, negative shareholder equity with high level of debt and so on. Balance sheet looks green, they're not paying dividends, and on the insider transactions we see no volumes. So ownership breakdown, general public holding 94%, institutions less than 5, private companies 0.6, insiders 0.1. And top shareholders, we see advisor shares investment added 435%, last reporting holding date 31st of March. Do we find here, for example, bigger BlackRock or Vanguard? No, there's no this kind of company, but mostly they are adding, and I see there's on both sides of the companies. Simple Safe dividend shows that shares outstanding keep significantly increasing, and they do not have any revenue yet. So pretty much they are investing from the printing shares out. So it's good for the company, but for the shareholders, they dilute in every year, and that is not good for the shareholders. And the price, so it's currently, there is potential, of course. Their volumes are raising once again, 29 million currently. So there is possibility that it could bounce back to those numbers that it have been in February, March, April. So maybe to $20, I would say. And yeah, investing.com, summary the stock for long-term investors as a strong buy. Thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.